Hello, everybody. Hope you can hear me. My name is Markos Zachariadis. I'm an assistant professor at Warwick Business School, and I'm also working at the University of Cambridge and looking at a bit of the impact of digital innovation in financial services. So I've been researching the role of IT in finance for quite a few years, actually, over a decade, when I started doing research at the London School of Economics. But today, I'm going to basically introduce a little bit what we do at the moment around open APIs and transformation in the banking sector. So this is a project that has been funded by the Swift Institute, which is kind of the research arm of Swift, trying to engage academia into what's happening in the industry at the moment. And our task is a joint work with Dr. Pinar Özkan, who's at the strategy group at Warwick Business School as well. We're trying to understand a bit more is basically how the theories we have at the moment around platforms, for example, or disruptive innovation, or the use of APIs in different sectors apply or inform our understanding of what's going to happen or what is happening, the transition that takes place at the moment in the financial services sector. So what I'm going to do is briefly introduce a few of the stuff that we already know in academia and the models and the theories that we have and use at the moment, and then give a very quick overview of our initial results. So these are preliminary results we've been collecting from the industry, from various reports, surveys we do, and a lot of people we've been talking to from the banks, fintechs, regulators, and kind of different stakeholders. So this is kind of multi-stakeholder analysis on the impact of open APIs in banking. So what we know so far, there's extensive work, platforms, obviously, and theories around networks, for example, are not new, right? So they've been around for many, many years. And we know that there is a huge advantage when we talk about multi-sided networks, for example, coming from the network effects that are in existence in different kind of networks. So we have examples like, Apple. I guess iPhone is kind of the very standard kind of case study where we look at how Apple really controls the hardware and creates a platform whereby it kind of allows developers to come in and develop solutions that Apple would never, ever be able to do themselves, right? So through opening it up, the phone as a platform, it kind of allows more value to pour into the device and kind of create what we call kind of an open platform, sort of to speak. And we have measured that, so we know that there are network effects around it. Other examples could be for Uber, maybe, or and that would be kind of a two-sided platform, or Deliveroo. I don't know how many people use or know Deliveroo, for example. That's a three-sided platform, et cetera, et cetera. So the more you open up your platform and get participation from different stakeholders, you get more value onto your platform. We measure that. We know that network effects kind of exist in that particular context. And then we have open APIs, or APIs in general, have been used in banking before internally, but in other industries we have seen their kind of usage to cultivate really that relationship or control and coordinate the platform in itself. So APIs are being used strategically to kind of interface between developers, for example, and create communities, but also for the advantage of Apple, for example, where they can kind of control, coordinate the way they want to interact and engage with the developers community, but also the people who are actually want to use their platform to add value and create new products, etc. From research on open data, we know that they have the ability to increase transparency, and we know that Open Banking project is for that quite a bit. So transparency quite central in their understanding of why and how APIs should be used in banking. So we know that it also encourages innovation in that particular context. And then we have theories around disruptive innovation, which is, I see it, a very, very misunderstood concept that is already kind of being used around. So disruption is not necessarily, it's not actually, according to theory, a firm that comes in like Uber and kind of destroys everything and then kind of conquers the market, et cetera, right? So a lot of people talk about Uber as being disruptive. It's not necessarily the case, because disruption is more like a process rather than a particular phenomenon or a particular firm, right? So we have, as Christensen and the other guys like Rayner, et cetera, from Harvard and MIT and different schools in the US have looked at disruptive innovation, is not that kind of dramatic breakthrough as someone would expect, but is a process that kind of works slowly and moves from the bottom side of margins as it moves up to kind of more high margin kind of products. So you have the low margin products have been disrupted by new entrants, and then incumbent firms are pushed to the upper side of the market where they kind of focus more on high margin products, and that happens as time goes by. Challenges. For example, like if we wanted to use the kind of finance example, they're conquering more and more in space, and they're cornering the incumbents on the upper side. So kind of having all that stuff in mind, we are, and imagine that all these things and theories kind of apply in this particular context. You can imagine that we're not, it's kind of complicated in a way, but we're talking about paradigm shift, and this is kind of really driven by the regulation we have at the moment. We have been seeing, in different countries, but for example, here in the UK and Europe, PSD2 and the Open Banking Working Group mandate. And the move, I guess, is really to put customer at the center, or that's what people like to think, right? So really kind of going back to the roots and see what the customer wants. So that's kind of beneficial for developing more innovation, et cetera. At the same time, we have technological developments, and we have open APIs used more extensively. We've got further security. We're in a networked economy, so everybody's interconnected. We've got mobile devices, et cetera. And all that stuff, if you think about it, it kind of really requires a new kind of view, a new understanding of what the traditional banking models do and where we're kind of moving towards in terms of disrupting the sector or using kind of data, open data in the sector, and kind of the other concepts that we kind of briefly mentioned. So what does that mean for the changing landscape? What are the new rules of competition? So by talking to a lot of people, we have grouped, and again, these are preliminary results. We're going to have a full report coming into the new year. We have seen, for example, that brand equity is kind of the very important themes that comes up again and again. So banks have been very good up to now, I guess, in kind of maintaining their brand. Even after the financial crisis, it's using or seeing a logo or seeing that behind a particular product, a bank exists. I mean, people may not necessarily like the bank, but they trust their bank. But again, brand is something quite important for the sector. So it's going to be a big challenge because now we are going to be, talking more about an ecosystem, as a lot of people say, and use that kind of particular word. I can use that as well in this particular context. So you could have a white labeling, for example, of particular services that sit on the top of the bank, and then the bank logo is not going to be reinforced with a customer. But maybe that's not a bad thing. But I'm just saying that this has been quite an issue, and a lot of the bankers and people kind of in the industry at that moment kind of think about this in these terms. And again, from the challenges side point of view, I guess it's something that they want to build, right? So they want really to take that little bit part of the market and reinforce their brand to the customer. So really we see kind of a power struggle between incumbents and challenges, or if you want to put kind of a label on these different stakeholders. The other kind of thing that we've seen emerging through our discussions is obviously trust, right? So, establishing trust is quite key in any kind of transaction between the consumers and the financial institutions. So I guess in this particular context, incumbents might be in a better place. As I said before, we often hear from people talking that maybe we don't like our bank, but we trust our bank. So I guess a big challenge for the challenges of the new players into the market will be basically to establish that trust with the consumers. And thinking about platforms and exchange of data, et cetera, maybe the fact that a fintech can collaborate or a new company can collaborate with a traditional bank gives a bit of reassurance to customers as being kind of a part of a more kind of trusted system, so to speak. Another thing that kind of emerged quite a bit is transparency, as I talked about briefly before. Having kind of systems communicating with one another and having, kind of the unbundling of services, as we say often, kind of will not allow any more banks to kind of hide behind, rules and regulations that are not obvious to customers and then charge them more. So there's going to be kind of a much more transparency in terms of how services are being priced, but also because there is a move from the regulators and the competition authorities to have a bit more better understanding of what the quality of service is that they provide. It's going to be more difficult to kind of have that in a vague environment where a customer really doesn't know what he pays for, but also doesn't really understand how the value he's getting comes from, right? So, and then finally, the penultimate, I guess, point is who owns a customer, right? So we've been speaking about, customer data, for example, and I know banks, kind of really had that in the center, so they'd like to have the customers close and through a current account, for example, cross-sell kind of different products, et cetera, et cetera. But with a new kind of approach in terms of platforms in the banking sector, that's something that has been challenged. But maybe again, that's okay. Maybe you don't have to own the customer, but still kind of be in the center or be part of that particular ecosystem and have access to their data, and so to speak, as far as the regulation goes. So these are kind of things we're exploring at the moment and trying to understand a bit more, but there's a lot of, that kind of vibe that comes from the sector. And the final point, I guess, a couple of slides, is the idea of kind of building an ecosystem, right? So this is something that, banks are not really familiar with. This is something that banks have been doing for a while. So in competing with incumbents, but also with large kind of technology companies, they will really need to be in a better position to kind of cultivate and build ecosystem using strategically the APIs and their technologies to interface with outside partners. And that's where the last kind of point comes in, and it was, I guess, part of Mark's presentation as well, as to how important it is to collaborate with smaller players. Collaboration is kind of a relatively new concept in the banking sector, but there are, obviously some of the initiatives that are trying to address that. We have seen from previous studies, the lack of collaboration has delayed innovation, particularly in the financial services sector, for quite a few years. So I guess the point is how through open APIs and APIs in general, since we're talking about that now, these collaboration can be kind of facilitated and be cultivated before the different stakeholders. So this is kind of a teaser of what we are doing and what kind of our initial results, so to speak. So the fuller report is going to be out in the beginning of the year. It's going to kind of describe what theory says, what are the traditional models, how have they been used in different industries, smaller case studies, and how we can inform our understanding of open APIs in the banking sector through these kind of previous studies and the findings that we'll be collecting. So by all means, if you have any questions, you can come and find me afterwards. If you want to be updated about the research we do at Warwick Business School, here's my email, or I usually occasionally tweet about stuff. So if you want to be kind of learning about the report that's coming in the new year, feel free to follow me, and then you'll definitely see that it's coming up. Thank you very much.